All right, we're back answering your tax-related questions. Ryan Dodson with Liberty Tax Services is here. This person says, my state taxes were submitted February 8th. They were accepted the same day, but it's still processing. What is going on?
So something like that, Tanya, they could be trying to verify information on the tax return, and they could be looking at other items. However, 9 weeks does seem like it has been a fairly long while to file your taxes. So my suggestion would be giving the state a phone call just to check in to see if there's anything you could do to help move it along.
Okay. This next question is, why am I being taxed on an inherited IRA if my total inheritance amounted to less than $2 million?
So inherited IRAs are very unique, and the reason why there's being taxed is that while there is no estate tax on that inherited IRA, what is occurring is that money has never been taxed for income tax purposes. And so when you pull money out of that inherited IRA, which you're required to do so within so many years, you're going to have to pay income taxes on that money when it does come out of that inherited IRA, because the previous owner didn't pay taxes on it.
Gotcha. All right, this next question is about dependents, like child dependents. And we know that the tax credit for child dependents has gone down this year from years past. So refunds are going to be a little smaller this year.
Correct. We are seeing, and the IRS has announced that they're seeing much smaller refunds this year compared to last year, and that has to do mainly with not only the child tax credit going from $3,600 or $3,000, depending upon the age of the child, back down to the original $2,000 level, but also child and dependent care credit has greatly been cut. It used to be up to 50% for almost anyone for a rather large dollar amount, and that's been cut back down to 20% as well.
All right, so the next part of their question is, where do I enter their name and social security number, and is it a deduction or is it a credit?
Depends upon the form. On the federal tax return, it is going to be a credit. Depending upon their age, it's either going to be a $2,000 or a $500 credit, depending upon their age. And in North Carolina, it is going to be a deduction, and how much of a deduction depends upon your income.
Right, and there is a part on the 1040 where they ask you for the child's name or the dependent's name and social security number. And so it's clearly on that form. And the federal form, like you said, that is going to be a credit, not a deduction. All right, so this next question is, why do some states have no state income tax? Lucky them.
So some states such as Florida and Tennessee and Alaska, they don't have any income taxes. However, it's a state government. They have to run of it. So they're going to get their income tax. They're going to get their tax revenue from other sources, such as Florida gets theirs from their hospitality tax. So when you go and stay at a hotel or so forth, they have a pretty good tax rate there. Or like in Alaska, they get taxes off of oil and gas revenue. That's why Alaska doesn't have any personal income tax. But most states are going to collect taxes one way or another. It just happens to be that North Carolina chooses personal income taxes along with 30 some other state jurisdictions in the United States.
Yeah, we're definitely not the only ones with a state income tax, that's for sure. All right, so this next person says, my husband passed away last June. We have not filed taxes in almost 10 years because our income was too low. He was 89. I am now 87. Do I need to file for 2022?
Well, it is going to depend upon your income level. And if it's just Social Security and that is all your income that you have during the year, then odds are the answer to that is no. However, if there's other income that is coming in, whether it's from a pension or whether it's from interest or whether it's from selling stocks or bonds or anything else like that, then yes, you could possibly have to pay income taxes on those dollar amounts. And because you're single versus married filing jointly, those dollar amounts requirements have decreased.
All right, and something that we should probably make clear is you don't ever age out of paying taxes.
Correct. Yes, you never age out. So my grandfather, he paid income taxes all the way until he passed away at 96 years old. And so, yes, it all depends upon how much income you have, not necessarily your age.
All right, and usually that income to file taxes is what, like a 12,000 something?
Correct. Your income has to be, if you're in your 80s, typically it's $12,450. However, if you're older, you get a little bit extra standard deduction, so it's almost $15,000 if you're above age 65. But those are the general levels that you have to. Social Security, only half of your Social Security counts toward that dollar amount, and so those are the generic ways to look at it.
Okay. This person says, if you live in one state but you work in another, do you file taxes in the state that you work in or both?
So you're going to file taxes in the state in which you are a resident and also the state that you're going to work. So since we are close to the state of Virginia, let's use Virginia as an example. Let's say you live in North Carolina and you work in Virginia. So you're going to file a Virginia tax return, but listed as a non-resident return. You're also going to file a North Carolina return where you're going to be a resident. Now, you're going to pay income taxes in both states. However, in North Carolina, because you're a resident, you are going to get a credit for any taxes that you paid in Virginia or in the non-resident state. So you're not ever going to get double taxed. It's just that you are going to, but you do have to file 2 tax returns.
Gotcha. You have to file 2 tax returns. All right. We're going to take a quick break. We're continuing to take your questions in the next block.